Is Applovin a buy after falling 30% on earnings? So the initial reaction was falling 30%, but since then it's rebounded about 10%. The stock is still down 20% on these earnings, so let's dig into why. In terms of the numbers, they had a slight miss on revenue and EPS came about in line. Now the fundamentals are still very good, as you can see down here, but you're seeing a slight deceleration from the growth of the last quarter. Now if we actually look at the press release from the earnings, you can see here where it's decelerating from the last quarter's earnings. So we have slightly less revenue growth, slightly less net income, so slightly less profits. And the guide came a little bit short on the midpoint at 2.07 billion. The street wanted 2.08 billion, so they hit a little bit lower than that range. Now, this company has been in trouble lately with recent shorts reports sending the stock down, as well as SEC investigations ongoing. The SEC has been investigating them for about a year for their data collection practices. But actually, there was good news on this earnings call when they announced that that was going to be over. So we have a slight miss on the numbers, but there was good news with the investigation. But overall, did that justify the 30% drop? Now, when we look at the volatility historically, like Applovin has had a lot of volatility. You have to keep in mind when looking at the graph on the right, they've been up a lot in the past 5 years. But if we look at the left in the past year, it's been going up and down rapidly. Now, the valuation is still $114 billion. It's still a very large company. But these recent drawdowns leave people wondering if they have a hated moat. This guy on X called it app hating, not app loving, which reflects how fragile the narrative has been on this company. Now, analysts still rate it a strong buy, but since earnings just happened, you have to wonder if analysts flip when they factor in the deceleration of this quarter. Again, very strong numbers, like nothing to complain about, but the worry is going to be on the guidance and how they do in the future, because if they have more misses in the future, then that can question valuation a lot. Right now, we're at the low range of these analyst targets. We're actually below the low range because we're about $330 a share now. So analysts are forecasting as high as $790, but we'll have to see in the coming week if these targets change. So just a summary, long term, the moat is intact. Applovin is still the king of mobile ads. They're very good at personalization and distribution of these ads. They have a very large data set. The pressure is now on the valuation rather than the business quality for these next few quarters, which is why I'm personally sitting on the sidelines despite the bullish targets. Before the print, expectations were high with 4 quarter beats in a row, but I'd like to see a few more beats so that we have that consistency. Let me know if you're capitalizing on this opportunity or waiting for more info in the next few quarters.